All right, let's start again. Nightly strategy podcast, January 25th, 2022. All right. Last night, those of you that were on board heard me talking about why the Russell would be my target of choice this morning for turbo. I just want to point out on 1 minute charts why the Russell is so good. You're noticing all standard entries here on SSCs and COTA 2s. If I had the full range of indicators on, you'd see all of those as opportunities. And then yesterday, this was the close. And then today there was a big gap down. And then it monkeyed around and then made a new low as a collapsing dragon. So I'm short at the red dot with the white, with the yellow box as the risk box. And then I'm scanning just previous major support levels. And when that collapses, there's another collapsing dragon. When that little shelf collapses, I take a third position, and then I'm prepared for fourth, fifth, and sixth positions here, and here. If it gets that far, it didn't go down that far, and it reversed for a nice intraday move. But the point is that was the least surprising move of all, which you heard me talking about last night. That one was worth about 12R this morning, in the first hour. Just managed in a routine way with visual box trading. So this weekend, I'm going to be recording a session for Dr. Tharp and the Van Tharp Institute on creativity, using the insights from Professor Angus Fletcher's research on creativity, which he and I are working on for the Army application together. So this was kind of funny. We had a email conversation this morning while the market was melting down. And so we've been going back and forth, like I said, back and forth and round with other creativity scholars and decision-making scholars, some of whom are predictionists and some who are descriptionists. And you see this a lot with the AI people too, artificial intelligence. There are some folks who think that you can predict the future, control the future, know the future, and that AI can just do that better, faster, harder, stronger. To those of you that know that song. But Angus just wrote a really nice article this morning that got published in Wired magazine. And I posted that on Patreon too. And he sent me a heads up copy of it because it really gets to the discussion about description of the future. And, he asked me to distribute it around the Army folks, which of course we did. And my note back to him was, I said that, last night's description of possible upside moves and downside moves in the Russell reminded me of why we don't try to predict the direction, but that we anticipate the possibilities. I can't help it cutting out, so it'll just hang with it. And so he laughed and said, I should have known that you predicted the drawdown of the last couple of days. And my point was, I'm not predicting anything. I'm just looking at the possibilities and probabilities of not impossible future states. So this is where creativity becomes important. You're trying to imagine not impossible future states, and then you're trying to continually update your reward to risk ratios, and then adjusting your risk according to those dynamic estimates, and that you maintain some actionability in the form of having investment capital ready to exploit those opportunities, and that you manage your risk to take your risk out in the same way we go to no lose plus dinner for two. and that you are managing a number of targets to find the ones that have the best reward to risk ratio at any given moment and try to stay inside those positions and monitor them continuously as the market changes, not predicting, but just assess and respond. And so our point of view on all this as artificial intelligence and decision-making scholars is that although history doesn't repeat, it does rhyme. And that when you look at large enough groups of humans, they tend to act in statistically describable ways, and that you can observe the effects of their decision-making in price as the environment changes. And that humans under stress do the same thing that mammals and frogs do. And that is they jump fast and hard without thinking. So the idea of creativity then is to get outside of that set of instinctive behaviors and to begin thinking of alternate futures and possibilities. And so the creativity work that he and I are doing with the Army is basically organized around these ideas. This is going to be the substance of my presentation this weekend for Dr. Tharp and at a couple academic conferences I'm going to. That our goal in the Army with creativity studies is to try to improve our annual rate of return by like 3%. Because there's $1 trillion annual budget in Department of Defense. And if you could get a 3% compounded rate of return, that's worth about $35 billion a year. But the right way to think about that is if you could get a marginal improvement on every decision that your leaders in your organization are making, and that you could compound those 3%, you now have to look at what is the cycle time of my decision making. If I'm making 10 decisions a day in the markets, and if I can improve the performance of each little decision by 3% and learn from it, then the compounded rate of return on an incremental 3% improvement 10 times a day, that's 2,000 times a year. That's extraordinary. So that's the business case for why creativity matters. If you think about it, that's what the human species our edge is. It's opposable thumbs, the ability to defer gratification and to imagine future states with some creativity. So in the Fletcher creativity model, what we're doing is we're comparing the creativity that comes out of our standard 2-hour lesson with the creativity that comes out of the 2-hour Fletcher treatment on creativity. And we're gathering a lot of evidence on how officers perform. We're comparing it to a standard rubric. And we already know that the Fletcher treatment is dramatically improving our rate of creativity. And so now we are reinforcing those insights in a lot of practical exercises, and that we're writing about that in papers. We're incorporating it into our electives program in the school, and that we're scaling this to the rest of the Army. So what's happening is that we are basically using artifacts to change our language about creativity, to create new habits, and to shape the culture of creativity going forward. And the way we're scaling that is throughout all Army schools, through partnership with other colleges, with Army headquarters in the field. We're updating our warfighting doctrine and the doctrine of our international partners. Central to all that is the field guide to creativity that Angus put together specifically for us. And that's the basis of the creativity courses that I'm offering for traders. And we're starting that this year. I've taken the 30 modules that he's written specifically for increasing creativity for leaders and decision makers, and applying it with case studies directly for traders. So that's the nature of that. So anyway, I'll be talking about that this weekend with Dr. Tharp. Let's get to the market health check today. So today was a large gap down. It sold off, but not as low as yesterday's low. It still got down just past the Z3 line, so it was looking very dangerous. When that failed to fail further, we then had kind of a recovery back to a micro improvement from the open. Although the S&P was still down a fraction, it finished a lot better than it was looking at the start. But the 3-period haul is down. We are still well below the Z2. We are past the 7%, 7.5% sell-off. We are right on the boundary of the 10% sell-off from the swing high, which is here. So we closed just above that. The river is sloping down. The PSAR is down. The slope of the 30 is down. The only thing going for this is that we have like a bar 1 and a bar 2. So technically, when this comes back and makes a high greater than today's high, we could count on that as a 1, 2, 3 entry. And that's not impossible to trade in that way. So I'd be watching 440 as a critical state and ready for long side positions if it gets above 440. As long as it stays below 440, my bias is to the downside. All right, let's shift to the sectors now. S&P down 1.22. The Russell down 1.3. Qs were down large, down 2.3. The Dow was better, only down a quarter. Emerging markets were a little bit better at minus 0.19, and the treasuries were the best performers of our 6 prime sectors, only down 0.16, so not much to choose from. Right, improvements, sectors that were better: XLP, discretion or staples. Bitcoin down 1.11, materials and S&P biotechs down 0.8, lumber 0.7, Mexico 0.5. The other lumber, it was up, the first one in the green at 0.03. Agriculture, finance, commercial real estate, wheat and precious up to 0.52 now. The VIX still up at 0.6. Blended commodities 0.9. Oil, Brazil continues to dominate at 3%. Energy and oil exploration came roaring back today at 3.8. The best performing targets, 6% in Devon, 5.5% in Alcoa, 1.25 or 1 1/6 in John Deere, and Robinhood 0.5. Underperforming sectors today: blockchain down 1.3, Ethereum, lithium down 1.5. Marijuana consumer discretionary 1.7. Bitcoin moonshots in the fangs down 2% and a fraction. Tech was the worst of the sector spiders at 2.3. Clean energy just continues to suffer at minus 2.4. Arc Genomics and Arc Innovation down 3.7. So tech is just not playing ball at all. Targets that underperformed, Coinbase 3%, Microsoft and PayPal 2.5%, US Steel 2.25%, Squarespace 1.7%, Cliff 1.5%, Virgin Galactic almost invisible now at 1.4%. Tesla continues to suffer, is now down testing the key price level of 900 by being off 1.25%. Take a quick look at daily reports. All right, so we've got the market remains in sideways volatile, so this is emphasizing the intraday trades. Still at the low end of neutral on the 10, 30, and 90-day lookbacks. The 2-day is still trying to make the turn, but the 270 is still decaying. We're still almost 2% underneath the 200-day moving average. Now, it only takes 0.25% additional failure now to get into bear territory, which we mark as 2% below the 200-day moving average. So we're really testing that. And then the ADX at 25.9 is a strong downward trend. So that's still in play. And the risk Z is still warning us about the abnormal and risk off conditions. And you can see that's coming down to test Z minus 2 here pretty shortly. Chevron, Exxon Mobil, in the min pains, see lots of tech and finance in the 10-day max pains with NVIDIA, Netflix, so on. Lots of auto framers in the Dow that are really working. 5 5-day downs to choose from. I want to highlight Chevron in the energy sector, just why we should be paying strong. Look how that has been outperforming, and so has Exxon Mobil in the energy sector. So that's what's working right now. I also want to say, I think finance is postured to start turning. So I'll be stocking XLF, but inside the finance space, American Express is leading the way well ahead of Goldman Sachs and JP Morgan. So you notice that Goldman Sachs was basically flat for today, and JP Morgan was only up 1%, but American Express was up 8 1/3. So that may be the earliest sign of leadership if this is the true turnaround for finance here. In finance today was actually relatively strong at 0.42. So to me, that's the sector among the sector spiders to really pay attention to. So I would be looking at FAS on the triple leveraged, as well as American Express. And then deep discounted prices on JP Morgan and Goldman Sachs for those of you with a longer term time horizon. I want to highlight also Brazil has really turned the corner. It was horrible on the 6 month and 12 months, but you can see that on the 1, 3, or 1 day, 10 day, and 1 month, it's really starting to dominate. Latin America is being pulled along. by Brazil. Clean energy is the element of the energy sector that's just getting slaughtered, whereas oil, energy, and energy exploration, oil exploration, is doing very well. Inside the auto framer, the ones I want to highlight, to me, you got a chance to start stocking JP Morgan and Goldman Sachs at 5-1 reward to risk, and the finance sector at 3.3. So, it may not start tomorrow, but at some point that's going to be a turnaround in the financial sector, and I'd be watching that one as a turning point. While the world is fixated on tech, I think finance is in position here as well. And then the Russell is at 3-1, and if you're looking at the risk value on that, it's really about a $6 risk on a $200 ETF. So that's about a 3% swing risk on that is well within reason, very manageable. On the regression line fractal framework, JP Morgan and Microsoft really stand out to me as deep value plays. This is how many ATRs below their fair value they are. JP Morgan is 6, Microsoft is almost 5, and you got to love U.S. Steel at 5 1/3 ATRs below its long-term fair value. So I'm always stalking that one. And then on the overheated ones, the ones that are the most number of ATRs above their fair value, you can just see the domination by the energy sector, and there's no reason for that not to continue. No daily squeeze is better than 2-1. Again, ExxonMobil, Chevron, and Devon Energy in the energy sector just crushing it. And you can see how American Express is standing out on the multi-time frame NDX. Brazil and energy are getting it done in the ETFs. Oil exploration is lagging the broader energy sector a little bit. So conversely, that means there's actually more room for that to run. Then I want you to compare the S&P against the Russell, and you can see that the Russell is actually postured a little bit better in terms of recovering from the sell-off with the 65 on the 2-day look back. So I think that's the index in the U.S. to favor for trades right now. There's some evidence of stability forming here as the slope goes past 2Z, and it's trying to put in a support level here. To me, 430 feels like kind of the line in the sand, that if it breaks below 430, you must be short. If it breaks above 440, that's where the first 1, 2, 3 entry would occur tomorrow, is above 440, and I'm going to pile on that one if we see that. That's everything I want to cover off the daily. Take a quick look at the trades from today. For Mustafa, I see in here, I'm only going to give you summary guidance on this. If you're not trading my patterns, then I can't really give you feedback from a learning value. That doesn't have a lot of value for other folks. If they don't know what your trading rules are or what you're trying to achieve, there's not much point in sharing feedback on that. What I would say is that if you put this on our standard frame up, you would see this as a fake one go to, and that's worth about 10R if you use the minimum manageable risk box that we teach. This one should be a long position and re-entry here. And then I don't understand why you exited with 2R in hand when you still have this move. This would be a COTA 2, this would be a COTA 2, that's a COTA 2. All of that is well above the Bollinger Band mean, and that should you would benefit from using those techniques. Same thing here in Brazil. This was such a strong sector today. This one was also worth anywhere from 8 to 10 R. If you're making these entries as kata twos. Let's see. This is Joe. Here's our gap down. It's unfortunate out of the office. This, like you did yesterday, this little failure to close the gap, when it rolls over and crosses the VWAP, that is your trigger. And when it breaks below the new low of the day, even if you don't take that one low, you can treat that one as a collapsing dragon, especially when it goes from fall to winter, and you will get all of that move, and then a 1, 2, 3 entry, or 1, 2, 3 exit here, and then this is your SSC entry with a rising 270 with a PSAR box here. You'll get paid to here. Even if you exit here, this one should at least scratch. This is a great short, reasonable cover to get paid. When it drops this low, I'd like to see you at least get paid for the hassle of being there. And then when I want you to notice this support level, that makes this the classic SSC in every way all day. Then this would be a second position on a Z3 pinch breakout. And it's very close to a super pinch because you have the Z3 lines pinching, and now you have the 270, the 90, the 30, and the 10. This is darn near a super pinch. And if this one gets you 3R, then taking the same exit off this one would have gotten you an additional 5R. That's a great exit to make sure that second position doesn't go negative. I'd like to see you take this as the reentry. You should be able to get paid in here. This is a good short. This is the collapsing dragon here. So even if you don't take that one, you got to take that one. Great cover towards the end of the day, and total of 5. And you're still well above. You're at about 0.45 on your expectancy. That's looking pretty good. But this is the one I want you to see. That's a super pinch, and we got to get that. Here's Mark. I like this better without that second position. This is one where you probably would have had your second position in, taken the exit, and gone negative on it. Great capital preservation. Now, when you get this 8 bars in a row, especially on a 2-minute chart, and then the PSAR flip is here, this is where your entry should be, not here. And your tight risk box here now makes this at least 1R. This is a good scratch. This is a good fractional loss. Now you're getting the Z3 pinch. On this little tight risk box here, I like this entry, even if it's when it crosses the RL270, this little breakout is certainly manageable with the PSAR, which gets you all of that in addition to that second entry. And this is a good shot. I like that one. That's good work. Nigel, on the DAX on 1 minute. break down out of the river, and essentially a hybrid frog. On this one, you should cover right here. When you get a move down to Z3 and it starts reversing sharply and you've given back half of the gain, then that's a money management stop. So this was a trade that could be taking. And so this is about prep, being ready to trade at the start of the day. Now, this is a good location on the PSAR flip because you've got a high, a lower high that is rejecting the VWAP. So you can actually get that in here when it is a lower high and rejects the VWAP and then crosses the dragon. That is a kata 2 to the downside. And again, you're so close, you would be so close to the Z3 line that a 1, 2, 3 exit would be here. And then your breakout is this entry here, not this one right here. This is an SSC all day. There's your harsh winter. There's the bottoming action in the RL10. There is your P1 outside the river. There's crossing the dragon. There's the PSAR flip. When the dragon rolls over and the RL30 rolls over, that makes this an owl entry. So the owl is a little bit later than an SSC. And then you would get paid on all of this, on this little consolidation that doesn't even come down and test the PSAR. That would then let you take this as a second entry. Now, when you are entering as it crosses the VWAP and then starts to roll over, don't let it cross the VWAP. Just take the exit, take the scratch, and then this should be your short. And then 1, 2, 3 exit here, go long here. I'd like to see you exit here instead of here, although I appreciate that as the exit. But you can also, on crossing the Bollinger Band mean or crossing the 270 or crossing the VWAP, any one of those three can get you long, and then that makes your PSAR exit all pay off. Any one of those pays off. This is like a kata 2 effort here. I like the idea, but I would prefer this one. The only thing that makes this one tricky is that you're so close to the other previous areas where price failed that a failure, at least you got out of it quick. I like the second shot. I like the third shot. And then you got to be able to take these in both directions. And then this would be your second entry on this collapse below the VWAP and the 270. That's the signal I want you to see also. Okay. Right there to the downside. So this is still, this is not bad. I mean, it's positive for the day, but there's more in there for you to begin getting routinely. This is the afternoon in the DAX. So this is what we like. Here is your, your kata 2 that works. It peaks up around Z3. You let it go through the PSAR. And now when it crosses the VWAP, that makes this really a terrific entry, and crossing the Bollinger Band mean, that's great. You should look at this Z3 line when that gets violated, somewhere in here for a second entry or a third entry. This is a great 1, 2, 3 cover. Love that. A great kata 2 or SSC entry. I love this exit, and I love the re-entry even more with a nice tight stop. And then you didn't let it cross the VWAP. Man, that's really good, man. It's hard to improve on that. I'd have been really tempted to take this one long and then probably would have scratched. I like this effort short, and it got paid. Now this one here, you're asking how to name it and trade it. This one is going to be a kata 2. Because what you have conceptually is this great big support level, a nice arc that held support here. And look, it had almost 20 bars of failure to fail. It did not fail. This is where you would expect it to fail back to, and it didn't. Instead, it breaks in the winter, turns to spring, and that makes this a kata 2. And then you probably exit here. Now this one, when it does not hold the Bollinger Band mean and starts to fail, you could either get short right there, as you noted, or when it crosses the VWAP, or when it crosses the 270. So that's a good short. And then your exit would probably be, when you're so close, this might be a 1, 2, 3, but certainly by the time it crosses the dragon, and then this PSAR and the PSAR flip makes this an SSC, and then you'd have gotten paid by holding it at the VWAP. You might have tried this short, it would have scratched. You might have tried long, but it was already getting late in the day. So that's really good, Nigel. That is about as good as you can get. That's solid trading for almost 9R. Well done. Michael, here's a series in what is this? This is Brazil. And yeah, and this is about taking the shots and focusing. Let's see what we got here. So this was a gap up, makes a new low of the day. I like the idea of short and cover. I like trying to get this good cover, but you also stop and reverse the second time, got paid, scratched. On this one, when it came all the way down here, we gave back almost 80% of that, but you did get paid. Good, good protection and capital preservation in both of these. But here's where our kata 2 should be. Got paid, scratched, fractional. This also has to be a stop and reverse. So you want to go long in this market because it is a sideways volatile market. There is no directionality in this market. All it is a large volatility in both directions. So you've got to keep taking these shots. This is a trade we missed. This is a trade we missed on the long side. Now you did get this one, but then there's about 16R that was in the bank waiting to be made. Now, yeah, so I talked about this, in fact, yesterday, about the range stat. The range stat acts as so that's an average range plus 1 SD, right? So this is from the low of the day, a range stat move is defined as the max reasonable intraday move. Okay. So what that means is that when you look back the last 30 days, 85% of the time, or 5 out of 6 times, it did not get a larger move than this. So when you are making your initial your plans for how far it can move off the bottom, you can't make your reasonable target more than a range stat from the low of the day while it's first going up that stack, because 85% of the time it did not go farther than that. However, once it gets past a range stat move, all bets are off, because this histogram looks like this. So if I take the average plus 1 standard deviation, if this was the minimum move, all of this data to the left, this represents about 85% of the moves. But the moves after that are not normally distributed. You actually get a fat tail. So you get the possibility of these massive, irrational, illogical, unpredictable moves. Okay. So when something has moved a range stat and has gone beyond, you can now say this is irrational exuberance, and we have no idea how far it can go. This is like when the water comes out of the floodplain. So if you did a cross section of a river, you would say when it's dry, it's here, and this is the average height of the river. And most of the time, the river stays inside its channel, but it has a little floodplain out here that if that river can ever get out over that lip, now there's nothing that stops it from just going crazy. So you have a very tightly constrained set of up and down here, less than a range stat. But once it goes more than a range stat, this thing can be extraordinary. And that's what happened here. This was probably a double range stat day. You can't get a double range stat day until you have a single range stat day. So at the start of the day, we use the range stat as the upper estimate of reasonable intraday moves until proven otherwise. If it gets beyond a range stat, then we're thinking, dude, special kind of day. Don't know what it's going to do, but we're ready for abnormal sized massive gains. Okay. But that was still pretty good work in there today. All right, here's Les back from his little vacation. And here's 3R, and he's working NVIDIA on the 3 minutes. Here was a gap down. This was that standard little morning hook. There is your harsh winter when you add in the gap and everything turned to winter, and then failed to fail further. And here's the PSAR flip. And here's where the winter turned to spring. Notice where this happens. And there's your PSAR flip entry. There's your risk box. And there's your winning trade right there. Now, when this makes a lower high on the RL10s, you can actually kata to this to the short side. It doesn't pay off much. And then this long failure to fail, you do a nice job of getting the SSC and capturing. Now, when this does not fail through the PSAR, this is where you got to get that re-entry right here. I am willing to accept this as a Z3 breakout, but this is really where I want you re-entering here. And then that pays off nicely. And then again, when this doesn't fail further, I'd like to see you get this. This doesn't pay off much, and maybe it scratches, but I'd like you to keep looking for those. Failure to fail is information. That means it still wants to go up. And this is a great PSAR flip, kata 2 to the downside and getting paid. So that's nice. Really nice work. Study these in here for pattern recognition. Now, the thing that I want to show is the idea of the harsh winter. And because Les has done us the courtesy of having the 4 seasons down here, I want you to notice the Red River. So this Red River is a 30-period Bollinger Band on the signal line. So it looks back 30 periods, plus or minus 1 standard deviation. Now, when this goes below 0 line and we're in the winter, notice that we are well below the Red River. That means this is such a sharp move that it makes this winter a harsh winter, which is why this is a great reentry, because the previous price up here sold off suddenly and sharply, and you know that it's a maximum sell-off because the winter is outside of the Red River. Now notice here, this thing barely gets out of the Red River, so that's not much of a harsh winter at all. So you would not take that as an SSC. You did not have a harsh winter. Where you can get in on this one is the crossing of the 0 line, and if you don't take this one, you can at least get this in here as a summer with a tight stop here, and then just take the PSAR all the way up, and you get that move. Now this one in the fall, notice that this thing is starting to stall. That makes this a really good exit. I want you to notice here that this is now a harsh winter, that when it turns to winter right here, you can actually get short right there. Even if you don't get this one, you can get short right here because it's now in the winter and it is below the Red River. That makes this all harsh winter. And when this thing finally does turn, it's going to be an SSC. So a harsh winter, again, is defined as a winter that is outside of this Red River on the MACD 4 seasons. That lets you now take this turn to spring as your spring into the summer for a really nice trade. So thank you, Les, for the courtesy of all right, this is Wojcik on the Aussie. Summer, fall, summer, fall, summer, fall, summer, fall, winter, crossing the VWAP, short, collapsing dragon, second short. I might have even tried a third one, but this is a great exit. You could even take that as a SSC. I love the, I like getting short here. I like the cover, but this should be a stop and reverse. And I think you actually did get that one. That's nice work. Now, this one, when it fails through the summer and crosses the Bollinger Band mean, you can get short here. This is a collapsing dragon, though. I like that. But as soon as this starts reversing, that's a good, you're just going to take that loss. And then this is a kata 2. So your question was, what's the pattern? Belly of the dragon, high or low. If you're using the RL10 and the RL10, high or low. PSAR flip. And now it's riding the Z3. That justifies an exit right here. This little compression, we would now see this as a low. I'm using the belly of the dragon now. A low, a higher low, a third higher low, and now a PSAR flip, crushing it. Kata 2. That's the second iteration of Kata 2. Here's the first Kata 2. Here's the second Kata 2 on the PSAR flip. Here's Ben capturing 6.5 on the Qs. I like this. So there's a gap down, hybrid frog off the bottom, goes up, great scratch. When this crosses the VWAP, you can get short there, or at the new low of the day where you got short, that's very good also. This was a nice, and on the 3-minute chart, that's enough of a recovery, so you got paid. What I want you to notice is the maximum excursion, call that 2. So when the maximum is excursion is 2 and you capture 1.35, so that's essentially it went 3 and you captured 2. So you kept 2/3. This one, it was plus 0.56 and ended up losing 0.8. So you gave back 1.35 R. So use this maximum favorable excursion and the actual capture. What you want to do is start studying your maximum favorable excursion. Figure out what those are. And then figure out your average. You go back your last 30 to 50 trades on these standard patterns. find all the maximum favorable excursions from max to min, and then find the average. Now, once you go past your average favorable excursion, don't let that one go negative. Start keeping half of the maximum favorable excursion. You should be able to know your average win and then your average max favorable excursion. So when you put that in a stack and you say, here is my risk box, and things starting to move up and it goes past my average win, remember, by the time it's at an average win, I want my stop to be at no lose plus dinner for two, so that I never let an average win go into negative territory. I always capture at least $100. But then when it goes past my average maximum favorable excursion, I want to, wherever that is, I want to keep half of that. Like, I don't want to give back 1.5 from my maximum favorable excursion. So you're capturing that data. Like, here was one that was plus 1.4 and we only captured minus 0.35. This thing was short. It was at 1.5 and then ended up losing money. Don't let that happen. Make that no lose plus dinner for. In fact, I'm just going to tell you, if you're past, as I look at your performances, Ben, when you get past 1.0 R in hand, automatically go to 0.2 R. I don't want to see another trade where you are greater than 1 R in hand and you let it go negative. Don't do that. Now, good scratch, good fractional. This one, because this was so choppy, your ideal entry would have been here, but this was already choppy. So letting it get above the Z2 line and crossing the VWAP is fine. That's a great tight box and then a great capture. So, but even here, you're up 3.2 and you give back 1.4 to capture 1.8. If you had been as rigorous on this exit as you were on this one, this would be that had been about 2.5, right? So if you get above 2R in hand, don't let it go below 1R. If you get 3R in hand, don't let it go below 2R, etc. Okay, so I want you to study your statistics and start understanding what your curves are. You've got 160 plus trades. You now have a data set you can start doing some work on to find out what your standard trade is looking like. This was good today, but this should have been over 10, just with tightening up your shot group. Okay. All right, that's everything we got for today. We'll get this published and posted.